Good morning. Yo, good morning. Welcome back to another pre-market analysis live stream. My name is Franco. This is Trading Futures Live. Good morning. Welcome. Welcome. Let's jump right into the content. We did have some news coming out earlier at 8:30. And they were not good news, I can tell. I like to follow this NBA 30-year mortgage rate, 6.81. So real estate market is getting tighter and tighter. And then here, the mortgage market index also, mortgage refinance index, everything is having lower numbers with time, okay? Now, the main news was this one, PPI month over month, still too elevated. So we were expecting 0.2%. We had 0.4%. So that's not good news though. PPI year over year, 8.5%. Our expectations were 8.4%, right? Then we do have Lagarde. Christine Lagarde speaking at I think it's 9:30. We have the 10-year auction, so we gotta be aware of this one. The other auctions you see, it has just very low impact. This one has a little bit more impact. And then we have the Fed minutes from last meeting. So how this works is that they have the meeting and they release the minutes from the meeting a few weeks after the FOMC, okay? And then we have one speaker, but this is in the afternoon. So we have to be aware of Lagarde speaking at 9:30 is going to move the euro. The 10-year note auction, that's at 1. And then we have the FOMC minutes at 2. So it's a very busy day, I think. Morning, Ismael. Soccernatic, welcome. Welcome all, okay? All right, let's jump right into the dollar. And today, I gotta tell you, the dollar is being sideways, right? But there's no clear direction for the dollar today. And I do have one scenario. So this is the daily chart, right? We're close to the recent highs, okay? This recent high was created September 28th, right? We haven't broken to the upside. And I want to show you the lower time frame. Look at this. This is as choppy as it can be. So this is the London Open, right? Here's the London Open. And then we have been chopping for the rest of the morning, okay? Now, with the PPI news, we spiked up, but I think there's some supply here from the Asia session. So I would be very cautious here with the dollar. I don't want to get into this chop. I do have one scenario, and it'll be this one, right? So this one is holding right here. I want to mark off this one. Let me mark out this one. Let me check all this. But I feel like today is the day to watch. I don't think today is the day to be aggressive, okay? I will consider also to lower my size because of the dollar. I don't have a clear movement here. It's really choppy, right? And here we did have this one. We have to go to a lower time frame because there's nothing here. Okay, I will check this out in a few minutes. So my first scenario could be a breakout to the upside and the retest here, right? But I don't think it's very likely. When the dollar is this choppy, most likely that we will have the same for the rest of the day. Now we have the minutes at 2 in the afternoon, but we won't be here in the live stream, okay? So probably the dollar will break out in the afternoon when the minutes are released. Who knows? That's a possibility. Okay, so that's what I found here on the 30-minute. Let's go down to the 5 minutes, because on the 5 minutes is where I want to see. And I do have this one, but if this one would have been here, like a little bit higher, I will rely on it, right? But at this time, I don't think I have any demand right here. If we end up breaking to the downside and we don't hold this, all this support created at during London, and then 4, 5, 6 in the morning, if we don't hold these, if we break to the downside, there's nothing I can rely on here. I don't like this consolidation. Okay, I think we might just either cross a little bit, come to this one, but there's nothing I can rely on, at least for myself. Okay, so the dollar today, too choppy for me to be aggressive, too choppy for me to think that I do have good trading opportunities. And it makes a lot of sense because tomorrow we do have CPI. Tomorrow we will have a break on the dollar, for sure. That volatility is going to come into the market, okay? Either to the downside or the upside, right? If you see the daily chart, is for me is setting up for a continuation, okay? But we need to see it breaking out, okay? For now, it's just sideways today. Pretty choppy. I never expected this chart today, especially with the news from UK. I thought that the dollar could move a little bit more today, but no. Very little, very little. Look at the dollar chart. Look at the dollar chart. This is the 30-minute. Sorry, this is the 5 minutes. Since London Open right here, we have had just chop, okay? We made an attempt to break to the upside. They found this supply, and then they're giving back down, okay? Regarding the yields, bond yields, this is a chart that I think probably not today, but tomorrow we can have a breakout to the upside. And I've said I did have this resistance right here, but I don't think we have too much supply here. If you go to the higher time frame, let's go to the weekly. You gotta go down to levels from 2010. These are levels of 2008, right? If I want to find some sort of like good supply, I gotta go here to like 4.325, right? And I haven't looked into this, right? I don't know if this is actually a good supply. But for now, we have almost 4%. That's certainly not good for the markets. Every time this thing goes up, it creates more bearishness in the equity markets. So this is the 30-minute. Just hovering around this line. The resistance that I had there, 3.967. Okay. Still, it's a little bit more volatile than the dollar, but there's not much either. Like if you have here the London session, yeah, they spiked up a little bit. Now they're giving it back up. I don't have much information here. Like what I would do here, if we have a breakout to the upside, right, and then we hold this area, then yes, I would expect more upside here. Now, if you go to the daily, if you see the daily wants to, the daily looks like very bullish, right? If we break either today's highs or yesterday's highs, I think we're setting up for more upside. If we just stayed here, tomorrow we will have a breakout, either to the upside or the downside. So I'm not worried about this chart right now. All right, regarding the VIX is another chart that I think is setting up for a more upside, right? Now, I don't trust this VIX. I don't trust this chart very much because this tells me that investors, every time this level is touched or reached, investors start to selling puts or buying risky assets. So I need to see it coming up. Like it looks like it wants to break to the upside, but I don't feel the panic. Like look how many times we have been here, right? And if you see the price action, yesterday I took a long trade, right? If you see the price action, you can sense that every time we hit a new low, buyers step in. Okay, they step in, they buy, or it's either short covering or buyers are being very aggressive buying the lows. Okay, and this you can tell because of this chart, right? Now, nevertheless, we had a gap up here, and we are trying to break to the upside. Okay, um, is it easy to break all these levels? I don't think it is easy. Like in January, we hit peak panic in January right here, 24th of January. This was the worst January in like I don't know, like 30 years or something, or 40 years. If you compare this chart to previous recessions, like you can see here the pandemic, right? Here was really a real panic, right? And here's where you see capitulation from investors, right? Investor capitulating. Not as of right now, right? So it all depends on what the market is going to do tomorrow with CPI, right? Watching the PPI numbers, it looks like inflation is going to be stickier than most people think. Yeah, well, we're close. We're very close. Like we were here September 28th, right? Close to 35. Actually, we never got to 35, but it's close enough, right? Every time this thing goes up. Now, if you see here, now we came here pretty when was this? 2 weeks ago? 1 week ago? Now we're trying to break that high. Let's see if finally we have some fear in the market and we have a breakout to the upside here. Crude oil. For those I know, Soccernatic trades crude oil. I have this is the supply that we had for a few days ago. It came here, created a double top, and this is the first demand that I put here is 88.10 to 87. It was working partially. We touched the 3 in the afternoon yesterday, and we managed to go to 90. So if you see here, 80 is it gave us like 2 to 1. Now I don't think this is the higher probability demand for me. The high probability demand is right here, 85.56. But this one's still working, and the supply is still working as well. So for now, that's all I have in crude oil. Let's if you see the daily chart, it still looks like it can reverse from here, right? Now the daily candle today does not look pretty. So it looks like there are more selling happening than buying, but I do have the demand right there. So if we blow this demand and we come to this one, we might have a retracement to this flip zone. That's what I call this, the flip zone. A demand just turned into supply, and see how this reacts. Okay, what is the price action at the time? If we can continue lower, or we're gonna break to the upside, definitely. Okay. And the crude oil is a chart that can tell you how inflation is heading to, right? I do think inflation will give up, but look, crude oil prices have been very sticky. Like since December, we had the opening right here. What is it? So this is the open for the year, right? Like $75. 75 plus 7 is 82. So we are about like probably 14%, 15% in prices of oil. So that tells me that inflation is still sticky, right? If oil prices collapse and go below the open of the year, then we could expect more like deflationary forces, right? But for now, I do think crude oil is acting on inflation, right? And I'm talking about inflation because of tomorrow's number, right? Which, by the way, my personal opinion on CPI is that is a very lagging indicator, and I don't. Um, I think CPI is a very lagging indicator. I don't think it's the best way to measure inflation. And personally, this you can have a different opinion. Personally, I do think the Fed don't look as CPI. I don't think the Fed relies on CPI's data. I think they have their own indicators, right? They say they do, but I don't think they. I don't think number one they should, and number two, I don't think they actually do it. Okay, rely on that number. Regarding the ES, let's go to the daily. Does not look very pretty though. A huge selling candle, not a huge selling candle, but we have selling candle today on the daily, and we are facing this demand, right? This is the daily chart. Do I expect a breakout today? I absolutely don't, right? Tomorrow we could have a breakup or a breakdown, right? So today I want to rely on price action. Again, tradable reactions, no more than 3-1. Yesterday I took a trade. I got 3 times my risk and the thing went like 10 times my risk. But I cannot be fooled that that is going to happen in every trade that I take, okay? I want to just rely on my plan, be consistent and getting 3-1. And if I am consistent getting 3-1 and I win X percent, like 42% like I do, I will be making money, okay? I don't want to rely on like lucky trades or expect that my trade is going to move 10 times my risk. Today, same plan, 3-1. Until we have the news tomorrow, we can be a little bit more aggressive. But for now, I do think we will have some choppy markets. And that's what I want to do. Now, the demand in the ES is 3607. So I want to be aware of that. If I want to short, I want to rely on the price action at the time. There's not much on the ES. Yesterday we did have a move down, move up, move down, and if you see this is it's kind of choppy in a big range, right? So there are a lot of opportunities intraday, but the market hasn't moved in one direction yet. Okay. Leading indicator for inflation is the real estate market. If they will pay attention to the housing market, they will have a pretty nice picture of what inflation is doing, right? The housing market and the durable goods market, they account for like 13 to 17% of the GDP. And if they pay attention for those two industries, they will have better strategies to kill inflation or just incentivize the economy, right? To prop up the economy. That's my personal opinion, right? They are the experts. I just read books and watch videos. But yeah. The NQ, same picture. Although in the short term, the NQ looks like it's underperforming the ES. If you see here, we broke this low, right? Let's go to the daily here too. Not the ES. The ES hasn't broken the low. I think the Nasdaq is a little bit weaker in the short term, but overall the Nasdaq is outperforming the ES. Okay. So I want to rely on price action. I know that we are in a high quality demand from 2020. I think is September 2020. So I want to pay attention to this, okay? I don't want to be blind and think that this thing is just gonna drop 10% today, okay? Now, if you that's why they raise interest rate, because they want to affect the housing market, right? But they can have a pretty good picture of how their strategy raising rates is working on the housing market. I think they are very they're very oblivious of what they're, but well, look, we're talking, and in reality we don't see what they're thinking. We don't know exactly what they're thinking. What we know is what they say to the people, no, right? But I think a lot of their strategy is psychology, okay, more than actions, like scaring an investor or injecting some sort of fear into the market so people just try to spend less and try to, be more conservative. But I don't think consumers are caring much about what the Fed is doing. Consumers are still spending on credit cards or other, they're spending their money, so they don't care. They don't think we could have a pretty bad recession, which I do think we're heading to, or we are already, okay? Hey, George. Good morning, buddy. Yeah, I read a lot of books. That's the like that is the producer's price index. So I haven't looked into the report that came out, but I could do an analysis. Could do a video analysis of CPI this weekend. I will dissect the CPI and PPI reports to see where is the PPI being affected. I know the CPI is gonna have a big component on houses. Rents are going higher, even though prices on houses are stabilizing a little bit. Rent prices are going higher, right? Because of availability, inventory, etc., right? But the way they calculate that number, is so flawed. It's called the owner's equivalent rent. So the way it works is, all right, if I am an owner, right? If I own a house, they will call me and they will survey. They will make this type of surveys, right? They will call me and tell me, all right, Franco, you own this house, right? How much do you think you can rent it out? All right. So that's the way they do it, literally. And you can go to the Bureau of Labor Statistics and see the methodology, right? It's crazy. It's not that they see the rents closed in, I don't know, like the MLS or other systems. No, they rely on this data, right? So that's why I think PPI is not only a lagging indicator, but it's flawed. It, for me, is not a good way to measure inflation. I think number one, I think inflation is way above 8%. If you go to the grocery store, you can just notice it. At Costco, I used to spend $20, $25 max for a packet of chicken. These chicken thighs. Now I pay $35, and that's like 32 is the cheapest one, right? It's not like it's heavier or something. It's just price went up, right? PPI keeps raising prices, doesn't go CPI. Yes, but sometimes retailers need to sell, right? So they will probably cut their margins and will pay more to the producer and probably make less money in order to sell. So this is not necessarily 100% correlated. All right, so let's try to wrap up this video because the market is gonna open. It's gonna open in 10 minutes, in 15 minutes. All right, so we can talk about later when we're waiting for a we can talk about this later when we're ready for a setup. So we get entertained while the setup is unfolding, okay? All right, so let's go to the RTY. The RTY is an outperformer here. If you guys see, we not only didn't break the June lows, we haven't broken this low, and now yesterday we had a spike from the demand. You see that? Like the ES and the NQ, they're trying to push lower into this demand. So the RTY is the same demand, but look how the RTY is reacting off of it, right? So I do think small caps are the first one moving, right? They lead the market. This is a broad index. This is 2,000 companies, whereas the Nasdaq is 100 companies, and the ES is 500 companies. NQ has been very affected by semiconductors lately. The AMDs, the Nvidias, all these like Intel, they're struggling in this market, okay? All right, so my strategy today is going to be definitely tradable reactions, no more than 3 to 1. I don't want to be aggressive. I don't have a pretty good picture on the dollar, right? I need to wait for the dollar to give me a clear picture and direction. So for now, 100% neutral, max 3 to 1, okay? All right, guys, thank you for being here, and see you guys in 10 minutes for the live trading session. Later.